Hi, this is Randy Finney with Right Side of the Chart, and today is Tuesday, January 23rd, 2018. Want to do a quick overview, what to watch for in the markets today. We'll keep on the same theme I've been doing lately, just looking at futures of the main instruments that I'm tracking now: gold, oil, the broad markets. We'll look at platinum and silver as well. All right, this is a chart, a 60-minute chart of gold futures, and you can see, if you're new to my analysis here, this chart goes back for quite a ways. You can just see gold, simple but effective. You just look for these divergent highs and lows, and I'm referring to the divergence down on the indicators below, the MACD and the RSI. Negative divergence, you get these highs. So 60-minute charts, my go-to chart or go-to time frame for swing trading. And when we zoom in here, most recently we had this breakdown on the 60-minute chart, and it's been a sideways slog recently for gold. It's just grinded around for the last couple weeks or last week or so here, sideways after breaking that trend line. These are the support levels to watch. They're marked. Actually, this one is not marked. There we go. Had my scaling set on percentage. So there's the levels to watch. Those are still the targets I'm looking for, 1325 and about 1310 or so on gold. So nothing major right now. Maybe we get some more out of that, maybe not. So far this morning, we've had an impulsive move down. Markets are about to open. Actually, right now it's 9:30, so the U.S. markets have just opened for trading. But again, these are futures charts, so they trade mostly around the clock. All right, let's look at. Oh, one more thing. Keep in mind, I haven't covered this a lot recently, but over the years, you guys know, whenever I'm, you know, trying to figure out where gold's going, my analysis will always incorporate the U.S. dollar, and in doing so, my favorite proxy is the euro US dollar pair. Euro is by far the largest component of the dollar index. So if you want to know where gold's going, you just have to look to see where the euro is going. And if there's any doubt as to the correlation there between gold and the euro, simply just overlay a chart like I'll do right here. Let's see. Okay, this is the chart. This is the euro with gold overlaid. Gold is here in purple, and as you can see, the correlation is nearly a perfect positive correlation, meaning the euro goes up, or the way you have to look at it, the euro US dollar pair is euro against the dollar. So when this purple line is rising, the dollar is falling against the euro, or the euro is rising against the dollar. So again, so a falling dollar leads to rising gold prices and vice versa. It's as simple as that correlation. There are temporary disconnects, but for the most part, over time, it's been a very strong correlation. So again, you want to chart both together. Not necessarily at the same time like I'm overlaying here, but keeping an eye on both is what I'm referring to. Just jumping out to the daily time frame of the euro US dollar, I've made the case for years now, at least going back to 2015. That's right here. We had this large basing pattern in the euro US dollar pair. And I've been bullish on the euro, bearish on the dollar for a long time, expecting a break out of this pattern. When I showed on the dollar index chart, you just flip this upside down. We had a large topping pattern, and we broke down from that. And all along, my analysis was a breakout, come back in, back test that level, which we did, and move higher. So I'm still longer term bullish, but my concerns right now, as you can see drawn out here on this chart, is this potential rising wedge pattern. If you zoom in, we have negative divergence on the daily time frame here with the euro US dollar pair. And what this means is euro down, dollar up. If that does play out, that's going to put some downward pressure on gold and other dollar sensitive assets. So it's not yet confirmed. We need to have a bearish cross here on the MACD, but we're looking at some potential divergence there. And I should also point out that we have even more clear divergence on the PPO, one of my go-to indicators. We don't have a signal line here on this PPO, but that's what it's showing here. So again, that's what I'm looking for. And maybe another thrust down within this wedge near term, and another thrust higher before an ultimate breakdown. But again, that's something I'm looking at. And I will say this: my convictions on gold aren't super strong. That's why it's not a short. It was most recently a long. The miners were long on the site. But near term, so far, like I showed you on the 60-minute chart a minute ago, it's been correcting more so in time, but we'll see what happens. We'll keep an eye on that one. And if I have a strong opinion on the next direction in gold or the miners, I'll add that as a active trade once again. Okay, next up is platinum. In yesterday's morning market update, I added a chart of platinum right after I posted the video because I didn't catch that during the video. So, just a standout, a textbook breakdown. This is a very clean, well-defined uptrend line. We don't have any violations. A very clean bearish rising wedge pattern. You can see the divergence there confirming the bearish nature. And I posted right as we're breaking down. I mentioned shorting platinum, showing you my targets here, where I covered right above that target. Like I say, always cover just above the actual support level on a short trade. Just as I like to sell just below the actual resistance level because sometimes the buyers come and step in. So this so far was perfect. And I'm looking to recycle back into this. Um, Bounce targets will probably come up here at about the 105.48 area. I mean, we've already had a reaction. If you're swing trading this, I do think we have ultimately come down here to this target zone and possibly and quite likely down here to 963. So if you're not an active trader and you don't want to try to catch all the zigs and zags you didn't cover here, you can set your stops at entry to assure at least a break even on the trade and let it run. Or again, cover here, wait for a bounce, game the bounce if you want to go long, and then reshort at any of these reactions. You have a reaction high here, and you have quite a bit of resistance there too, about the 106, 105, 106 levels there. And at this point, a back test is possible, but I don't see it. Usually, when you get this far away from the wedge, you're not going to get a back test. But I also need to add this as well. There is a possibility that that's it for the move in platinum because if you look at the distance of the pattern, you take the widest point of the wedge, we've come close to playing out for that so far. And it's been an uptrend. Sometimes when you're in a pretty strong uptrend like platinum and gold has been, uh, these bearish patterns don't play out to their full measured target. So food for thought, but again, I'll tell you what I think is happening and what I think will happen, and that is a continued move down here, maybe a reaction there, and ultimately a move down to 963. And if we get there, that might be a very good place to go long if the charts confirm at the time. Okay, this is silver next up, another one of the precious metals. And for, I don't know, the last week or so, I've been harping on this line, expecting a downside resolution. That's what we got today. Look at that big red impulsive candle. This is technical analysis, guys. This is, a well-defined, fairly well-defined support level. We had a descending triangle pattern. I need to tighten that up a little bit there. And what I'm referring to about how technical analysis works. See, we didn't just limp through there. This was just a little whipsaw quick move. This is a 60-minute candle. It's impulsive and it's, big red candle. That validates that as a support level. So it shows a lot of eyes were watching that. Once that level went, boom, the seller stepped in. Stops were hit on longs, shorts piled in. That is TA 101. So there's your sell signal on silver. Hope some of you caught it. Let's look at the next one up, which would be crude. We'll look at crude futures. Crude's also pulling an old, correcting in time more so than in price so far. And again, crude is also a dollar sensitive asset. Crude oil is priced around the world, it's priced in US dollars. So here's the, first uptrend line was broken, back tested. Again, I've gone over this, not a lot more to report. Same story with gold. Where the dollar goes will most likely determine where crude goes. There is a little bit more, I would say, of supply demand and inventory uh, issues that affect the near term and sometimes the longer term trend of gold. But in the near term, lately, it's been trading a lot to the dollar. You can see this chart looks like gold. Here's a resistance level. Let me give you that line right here. Let's watch this. This is where I think crude turns down. So if you're looking for a trade opportunity today, I think a short on crude here is objective. We're coming up. There's a back test of a trend line, which should be resistance. And I just put a level there right at about 64.23. And you can see that's a nice level there. You have reactions from above. I'm sorry, reactions from below, reactions from above. So this is where I think crude takes a turn down and comes on down. And this is support, just like that support level on silver. You can see a line that's been tested several times. So once that breaks, if and when that breaks, we come down to my next target zone here around 62-ish. All right, and quickly we'll wrap this up with the broad markets. Another Groundhog Day. Same story. Nothing's really changed. Divergent highs here, divergent high, a little correction. I'll draw it out. these have been minor corrections. Another divergent high there, correction, another divergent high here. I should add that line. Let me give you a line right there. You can see we're extending these divergences, and sooner or later, the groundhog is going to wake up and not see his shadow, and then this trend will be over. This trend line will break, and that's when we get a correction. Until then, it's the same story, same everything. We're just moving up, and as I continue to harp on, we have absolutely no sell signals until and unless these trend lines get broken, and they are all in alignment right now with most of the major indices. That's the Dow. There's the S&P 500 futures, and you can see same story: divergent high correction, divergent high correction, divergent high on the RSI. Now we've made a slightly higher high on the MACD, but again, you guys know. Um, when you have a pretty strong move and there's a lot of differential in price, it's better to use the PPO. Let me hide the MACD here, move that down, show you the PPO real quick if I could. There it is, PPO. Unfortunately, this charting platform, I'm sort of taken a liking to this. I have, gosh, almost half a dozen charting platforms I use. They all have their pros and cons. This one doesn't give you a signal line on the PPO, but there it is. So we've ever so slightly taken out the previous highs on the MACD and the PPO, but we still have divergence on the RSI. And again, this is the S&P 500. And unless we break these trend lines, the trend remains higher. And finally, the NASDAQ 100. Let's see, let's clean this chart up a little. Well, there it is. You can see the divergences are extended. We still have, just by the skin of our teeth, negative divergence. The indicators are making equal highs down here, and the NASDAQ continues to push higher. And this is the trend line again, just like on the Dow and the S&P 500. We need to see these trend lines go. And now we're quite a bit away from them, so it's going to take a pullback of about, if we reversed right now, we'd have to drop about 1.5% or so just to get down to those trend lines on, at least on the NASDAQ 100. So that's where we're at. So trend is up. Again, it's Groundhog Day. We wake up every day. It's same old, same old, same old. But it won't. One day it won't be. Just as those metals are finally breaking down the support levels that I covered, and we'll see. So I'll continue to try to sniff out individual sectors and stocks that look the best for trading as far as broad markets go. If you're in there, whether it's your 401k money or you're trading, you're just holding on to QQQ or NQ or SPY, anything like that, the trend is up until these lines are broken. And I'll have to add some additional targets here if we continue to go higher on the pullback targets. There's one right there, about 68.45 on the NQ. All right, this has been Randy Finney with the right side of the chart. Hope you enjoyed it.